Hello everyone, welcome back to another video, and this is this week's watch list. So let's start off with the SPY. So quick notes, on Friday we had a massive red candle right here compared to other red candles. As you can see, I'm expecting to see a pullback to this green line right here, but even possibly even to this support right here. And let me draw like a regression channel right here so we can better understand. So as you can see, we might even go down here going to this regression channel. And okay, so the QQQ. Now this is an ETF, but I feel like it's a good time to short it or buy puts, and here's why. So first off, as you guys can see, we're in this triangle here. It's like a wedge, and we broke down from here, and we could see it stock all the way go down to here. That would be a nice take profit level for QQQ. But as you can see, we could retrace all the way down to 100 because we haven't had a market cycle in a while, and I think the market needs a dip or needs to like have a mini crash in order for it to start going up more. So why? I briefed on this last week, and as you guys can see, this is a massive like downward channel, closing channel, or you can call this a wedge. And anyways, we had some support like all going all the way down here, all the way down here. Now with the market being a little weird, we did have some downward momentum here below, but we found some support right here on this level on the 0 Fibonacci. So we could see breakdown. See in August, I would keep this in big watch, probably briefing on it probably every week until we see a breakout. So NAK briefed on this last week too, that we had it upcoming upward trend, but the market conditions made kind of like penny stocks go down a lot. So we'd have a breakdown. I shorted this and I cut my short for nice profit. But we could, this is a bullish candle right here, and we have some support right here. But as you guys can see, we do have an all-time low around here in this area right here. And now the reason I like this stock I'm buying up right here is because for covered calls, this stock is optionable and has actually a very nice premium compared to the cost. Like 100 shares only cost around like $42, and every week you'll be collecting around like $1 per per option sold, and that's like almost 2%. That's actually really good. DNXP, you guys can see we are in this wedge or this triangle, and as you guys can see, I'll go find a bottom right here. Kind of respected that bottom over there, and we're moving up, but we moved down. Especially with the market, we have to keep a watch on how the market's moving. We definitely could see our breakdown below this, then possibly below, possibly to the 72 cent range. So PFIE, as you guys can see, it did break down below, but then it had to push up. So it's kind of like a weird stock, but we could see a breakout in the future. And we are talking about this last week. It still hasn't been trading that nicely, and I couldn't really get a play out of it. But it's starting to go on the 0 Fibonacci. You could find some support there, or let me just extend this right here. Or we could have a support right here, and then we just draw a regression channel. So you can see the regression channel. It doesn't look as clean, but we could even see our retracement all the way down here. A2Y, another not really paying stock by stock below $10. And if you look at the volume, it's pretty low volume, less than a million shares traded every day, which is kind of a red flag here, but we still could find a decent play. So as you guys can see, we were in this downward triangle, but we did break down, and we could see continuation with this, especially with the upcoming market conditions. But the only thing that scares me is this really low RSI. But we can't really decide everything on RSI. But looking at the market conditions and QQQ and SPY, it looks very nice short play. So now as you guys can see, most of these plays are shorts, just like this one right here, ALTM. As you can see, we were in this wedge. I expected it to go up, but we did see a breakdown and have a short position in this. Retracement to the zero retracement, but we could see as low as 58. ARKR. So as you guys can see, we did have a massive breakdown in restaurants this past week, but as you can see, we're in this consolidation box right here, and we did have it's kind of like a support area because of this rejection at this price level. And but this might be a long-term ad because especially with COVID and COVID going away and more people are going to restaurants, so revenue would probably increase. But for the short term, this could possibly go down because the market and but let's watch for a breakout close above this blue purple or close below this purple and close below the 0%. UI8C, as you guys can see, we had support regions here and we had consolidation here like ARKR, but market conditions were not the best. We had to break down and we're going down, but we could see a reversal right here and we could even go to 6. Now this is not really a penny stock, but when I say penny stock, I mean less than $10. As you guys can see, it is a 4% retracement, but we could see stocks bleed even more, especially because this is a low volume stock, so less than 100K traded every day. CHCR, I alerted this on Friday to buy. It was actually a really nice play. We had a nice doji candle downward on the 61.8% Fibonacci retracement. It was actually very nice, and we could see continuation here. And I kind of sold most of my position here, took 1% profit because of the market conditions. But this is actually Netflix is actually a beautiful short that I'll be doing because so the earning I'll be doing it's an earnings play. So the earnings is on after hours on Tuesday, but so you might be wondering why I'm shorting this, even though the estimate is that it's earning the $3.18 per share. But I'll just look at previous earnings, okay? So as you guys can see, we got surprise earnings, and stock just died down like 7%. Now if you look at this one, this was a surprise bad. If we went up, this is so. It's kind of a lottery play, but historically, we would generally go down on earnings. But we did have, this earnings that we went up on. But this is kind of like a little play. He's like a fourth of position on this. FSLY. Oh wait, before I touch on something last thing to say on Netflix is that we actually have bearish flow on Netflix, so this could be supporting on the short position. So FSLY, as you can see, we're on the support, the 61.8 support right here, and we had some bullish flow on Friday, and we could see continuation here. But just remember, the best things to do in this type of market is shorting, and these longs in a upcoming bearish market is not the best idea. Dash, also known as DoorDash, but another bullish flow, nice candle. And we can see continuation to this Fibonacci. XLK. As you can see here, the massive run up. And now we just had a breakdown. So let me just put in a trend line real quick. As you guys can see, we're having retracement to here and might even get below that. And the RSI is dipping below. And look at this MACD right here, bearish cross. And this could see an upcoming bearish trend, and this is my really good stock to short. mRNA, as you guys might know, this is being added to the S&P 500. This is the reason it was a massive run up, but I believe this is an overvalued stock. I believe Pfizer should be valued at this, but you could try doing a continuation play on this. But in the long term, I think it's a good idea to short it because I don't really like the stock. So. Everyone, thanks for watching, and see you in the next one.